Three, two, one, I think. And we're live. Wonderful. So, a very good evening to everyone in the Asia Pacific region, afternoon to everyone in Europe, and morning to everyone who's joining us from the Western Hemisphere, or at least the farther west. And the farthest west on this call is our very own Michael Nauss. But let me just quickly thank you all for joining this week's mentoring session for the Spring 2023 edition of the Investment Challenge. It's it's been an exciting week as well on the markets. So, I'd love to kind of get into that conversation and talk to you folks. But let me do this. Let me first ask each of our mentors for the day to just introduce themselves with a sentence or two about who you are, where you are based, what do you do, and then we can jump into the conversation. Let's start in the order that you joined the call. Sowmi, would you like to?
Okay, good. Yeah, thank you. Good morning, good afternoon, or good evening, everyone. I'm Sowmi Krishnamurthy, and I run a consulting business called SK Market Insights Limited, which offers strategies for investment in across all asset classes. And I use a combination of technical analysis primarily, and also supplemented with fundamentals to confirm what I see technically. And I'm based in the UK. Thank you, Jimmy.
Wonderful. Thank you, Sowmi. Let's come over to Michael Nauss. Michael, a quick two lines about who you are and why do we love you so much?
Okay, so yeah, my name's Michael Nauss. I'm from the east coast of Canada. So yeah, as kind of far east, I guess, as you can get without falling off Canada. Currently, I consult with Trade Ideas LLC, which is a scanning and alerting and technical analysis company, and run my own website, Stats Edge Trading, where I just kind of share my research and thoughts on the market. Yeah, I've been in the market or in the game for many, many years, since 2006 when I started trading prop. So I have some experience with day trading from back then. I spent a couple of years in hedge funds, working in kind of risk management in the hedge fund space, and now I do that. So I've only been a CMT for 2 years or so, but I've been in the game for long enough that you can probably see a little gray in my beard, which I think happens from being in the market for any length of time.
A little gray in the market, in the beard, is probably a very good thing, Mike. And I think that still, and even having been in the markets from 2006, I think still makes you the youngest of the four of us on this call. The youngest, and yet not necessarily the least experienced. Sure. Anyways, let's come over to Sovit, again, a very popular figure in the CMT community in India. Sovit, do you want to maybe tell us a bit about yourself?
Yeah, basically, can you hear me?
Yes.
Yeah.
Thanks. So, I cleared CMT in 2013, and I've been in the market since 2007. Although I've been full-time in the market from 2015 onwards, when I left my accounting job. Okay, I'm mostly a systematic trader based on technicals. Okay, don't use fundamentals at all. Actually, okay, I'm looking forward to look fundamentals, but systematically rule based. Okay, and basically I coach for systematic trading. Basically, yeah.
Wonderful. Thanks a bunch, Sovit. So great. I mean, it's a very interesting group of folks we have on the call today with very diverse experiences as well. And each of you have kind of done some very unique work. So it's going to be a very fun conversation. I think our participants, Jomin, who was able to join, seems to have gone on the call, but Kaizad is reaching out to them to make sure that we can get. So meanwhile, for the purpose of this chat, let's jump into a couple of interesting themes. Have you guys had an opportunity to pay attention? I mean, that's the wrong question. What have your thoughts been on the markets in the past couple of weeks since the challenge has been going on? What's your take on the markets, particularly the S&P and its constituents, but around the world in general? So, let's start with you.
Sure. Yeah. Thanks. What are my thoughts on the market? I think I think the primary driver in the current market is the actions by the U.S. Federal Reserve, and that's because it normally is not the case all the time, but in this particular period that we are going through of very high inflation in the United States, the the main focus appears to be on battling inflation and bringing it under control to the Fed's target of 2%. And they appear to be having a tough time of it because no matter how hard they try and how many hikes they've made, including the most rapid increases last year, inflation has come down, but not towards the target. But the data, seems to be mixed, and in some instances, in the case of unemployment, it's quite low. So I think the Fed's determined to do its job, and I think you see a lot of talk going back and forth about a recession, hard landing, soft landing, no landing. But I think the point is this: I think the Fed is on a mission, and I think they were caught wrong-footed in the beginning of last year because they thought inflation was transient, which is not the case. And I think inflation has become persistent and sticky, as they call it. And I think that's going to be the main driver of returns because, as you can see in the short-dated treasuries, you can get upwards of 5% for up to a year in U.S. treasuries. And so equities have to compete with that for the additional risk you take over U.S. treasuries, and that's going to be tough in the current environment. And I think and historically it's been shown that when you have high interest rates, returns on the stock market are very low, relatively speaking. So, previously it was the case that the S&P was the main driver because interest rates were so low and you could get some double-digit returns. But going forward, that may not be the case. And I think whatever the Fed does, and they have a tough job, admittedly, so will drive S&P behavior going forward. And I think 2023 is going to be an interesting year. And I think particularly for those folks who are participating in this challenge, it's really a tough time, to trade because it's not an uptrending market. It's largely a downtrending to sideways market. So, given the limited, parameters that they have to, play around with, the choices may be few and far between. So, I think it's going to be a tougher challenge than a regular challenge, had this been held in 2019 or 2020, or even soon after COVID, when you couldn't help but make money because everything went up.
That's so
So,
true. I think it's a very strange time, and actually, it's also very good that our candidates and students who in their formative years are finding these choppy markets.
yeah,
It's funny. I've been doing a re-listen, as it were, of Jack Schwager's Market Wizard, and with almost everyone, some of the first piece of wisdom with each of the traders that have been featured is that you're very lucky if your earliest years in the markets are your worst years, whether it's
yeah.
because of the markets or whether it's because of your own trading style, because the cost of losing is quite low. Let's move over to Mike. And Mike, what are your thoughts about the markets and how, especially in the past couple of weeks, and what do you see as major themes for our country?
Yeah, it's I'm going to agree fully here, just because, especially the part about this is a rough market to do this challenge, right? As the fact that we're not going anywhere, right? It doesn't take a graduated CMT to draw some lines on the SP 500 and say for the last month or so we've really done nothing. There's not been a whole lot of constructive action, either up or down. And especially, I think, for newer traders, this can be the most frustrating time because, trading with the trend, we all know that's the ticket. That's the best way that we can stack the odds in our favor and have a little bit of outside risk reward. But when there is no trend, your job is just to stay alive and to tread water until then. There has been some interesting action in some of the commodities markets, gold and natural gas. And so there is trend and there is movement out there, but you have to be way more selective. You have to hunt way harder than you do in an overall trending market in either direction. But I don't see this type of chop alleviating anytime soon, barring some sort of shock event one way or the other. I just don't know what the catalyst would be to scare us, either up or down. I think, a lot of bad sentiment is already baked in, and there's really nothing that, the Fed or the market or anything that can do that will just wipe that away in a day. So I think, for the last while, I think we're in a choppy market, and that's hard. And sadly, I think that's going to continue for the foreseeable future anyway.
That's yeah, you're right, Mike. And especially like you said, with the markets being as sideways as they are, it becomes a very interesting test of our skill as technicians to not just stay sane and not try to participate in the markets for the heck of it, but at the same time to also look for opportunities among this universe of 500 constituents, plus the other couple of asset class ETLs that are part of this competition. How do we, find these opportunities? I'll come back to that as a Q&A before I finally hand Jomin over to you, or you guys over to Jomin, as it was. But let's come to Sovit. Sovit, what are your thoughts on the markets? And I'll be segue to the next question about trading styles right after. Sovit, what are you feeling about the past couple of weeks?
So, as Swami and Michael said, I totally agree with them that the market has been downtrending to sideways. Okay, it's more of a choppy downside moving market. So it will be really challenging for the participants, especially on the long side, to make money. Okay, so as Michael said, staying alive in this market will be really, really challenging. Okay, so of course the rules of the challenge are similar, that you have to trade at least 16 trades, and every 10 days you have to have at least one trade, otherwise you'll be disqualified. So that it will become even more difficult for them. So it's good actually that they learn the hard way, because trading will be hard on them. Real life scenarios will be really difficult for them. So if this is difficult, it's better be for them. And but there will be small trends. Understand that although the markets are choppy, they are never non-trending. Okay, if you understand, they are trends in some other time frame. It's if it's not there in daily, if it's not there in weekly, it's not there in monthly. Maybe it's there in hourly, maybe it's there in 10 minutes, maybe it's there 5 minutes, right? So obviously, challenge is not for short term. I know that, but there will be some trends. So there will be some way of making money. Okay, you have to find that way. Another challenge with the participant is that they have to perform in 60 days. Generally, trend following works on a longer period. Okay, really difficult to judge anybody in 60 days. Okay, generally I will say at least 1 year is minimum. I would prefer 3 years. Okay, but obviously this contest cannot be done for 3 years or 2 years like that, right? But yes, and also understand one thing, that any outcome of this challenge, whether people make money or lose money, they should not get disheartened with the results, because maybe this period is not suitable for their style of trading. Okay, if you are a long term type of investor, 2 months is not a period to judge them. Okay, so don't get disheartened if even you are not doing well, very well in this, because your style in this current market scenario is not conducive for that. Okay, so that is very important, that people should not get discouraged with even if they don't get good results. Okay, unless and until they have done miserably bad.
I think that's a very important theme that you kind of bring to light so well, which is identifying what our personal style is. and then trying to find trade opportunities in line with that. Now that is something that I, I figured out my style only, I think, a year or two into having been a full-time trader. And only after that it was able to kind of find some nuance and figure out what my sweet spot is. And before that, I just kept running from literally pillar to post, strategy after strategy, every kind of time horizon. And that, apart from causing a lot of stress and heartburn, didn't really do much for me. But coming back to this, and I have one more, let's call it a planned slash structured question for you, and then I'd love to make it a slightly more free form conversation and bring Jomin into the chat as well. But if you were competing, and this is something I ask all our mentors, if you were participating in these markets, given what you've observed over the past 2 weeks, what specific steps would you take? And let's come back around to Sowmi and kind of start there. What
Sure.
specific strategy would you employ or tools would you use to deal with this challenge, this market right now, if you were competing?
Yeah. Okay. Good. Yeah. That's a good question. It's a tough question too, because as Michael pointed out, it's a downtrending market and everything's going down. But even in the downtrends, there are some uptrends. There are some counter trend rallies, as they call it. But the conventional wisdom is that don't trade counter trend rallies because they don't last very long. So you have to be quick and nimble, and if you're going to trade counter trend rallies, and even in the counter trend rallies, you just have to look for strong performers that have a good fundamental backing to them. Uh, like for instance, I would have said, conventionally, I would have said, in this kind of an environment, you ought to be looking at stocks that are trading above the 50-day and 200-day moving averages, because they do perform consistently well. And even if you made a mistake, the mistakes are not too grievous. But I was just completely thrown aback by the rally between January and February of the growth stocks, the stocks that were trading below the 200-day moving average. I just couldn't explain it. I think they may have been a consequence of the big sell-off in December, when they were all liquidated, and people were getting back into those stocks because the fundamentals hadn't changed for them. They were just trading on reputation only. So I think this is where you have to look at it and say, it's a real short-term a challenge here for 2 months, and in the 2 months, how do I take advantage of what's happening in the market? And sometimes you have to throw conventional wisdom out and just be a tactical trader than an investor. Are you there? Okay. Did you miss me?
Yeah, that makes a lot of sense. Thanks so much. Mike, I'll come to you again. Same question. How would you tackle this challenge, this market, this time?
So I'm a pretty boring trader. I focus pretty solely on relative strength and relative weakness. And I find that in choppy markets, it actually becomes almost a better way to trade than in trending markets. And what I mean by that is that when nothing else is moving, or when the market is selling, the job of relative strength traders is to say, okay, what is still trending, or what, when the market is selling, well, what are they, the institutions or the market at large, what are they not selling? So, again, I go back to natural gas as a perfect example. The market hasn't moved much, as we talked about, over the last month or so, and this, natural gas has been in a complete free fall. So, looking for relative weakness in that kind of respect is pretty easy. So, what I would suggest, and a kind of more simple way, I think, to look at the market is when we are in ranges like this. Again, just mentioned, what stocks are holding above kind of upward sloping moving averages, right? Simple ways to define trends, because if the idea is that if you can find the good stocks and good uptrends when the market is down to choppy, then the hope is, if and when the market reverses and gives some sort of a lift, even if it's not a sustained one, that you already are watching or already are participating in stocks that are maintaining good trends. So, it makes the job a little bit more easier if you basically just define trend and define chop. And I think, was 100% right there on the 50 and the 200 day as a very simple way, the 20-day moving average if you're a short-term trader, as simple ways to quantify these. And basically, again, if the moving average is sloping up and price is uptrending above that moving average, say the 50-day, for example, then that at least, and if this is all happening, when the market is correcting, then that this isn't a target for large institutions and funds to sell, at least at this moment. And having a list of those, I think, is absolutely fantastic, so that, again, when and if things recover, you have a big list of names that are hopefully kind of poised to outperform.
That makes sense, Mike. And you're right. Something as simple as not simple really, but something as easily available as relative strength, I think, becomes such a powerful tool when understood and used with a more nuanced approach than just 70 and 30 of the RSI or so many other ways that uh, RSI tends to be pigeonholed in terms of usage. Right?
Yeah.
So, what are your thoughts again? Same questions. This market, this challenge, this time. How would you approach?
Okay. Basically, my style, this market not conducive to my style. Okay, I am more of a trend follower, and as Swami and Michael said, I'm also similar to that. That I trade with the relative strength. Okay, whether it is relative strength comparison or a RSI indicator, I use both of them. Okay, but this market is different. We need to understand. Okay, this is more of a choppy market. Here, the trends are not sustaining. Okay, especially the long trades, and they have to trade long trades, right? So for this market, I would recommend not my style, but it will be more of a retracement type of strategy where you go with the trend. Okay, and in among the trend, there is some sort of retracement, some sort of a correction or a pullback, and try to enter at that pullback, and the previous high is your target. You take a target. You don't use trailing trailing stop loss in this type of market. Okay, generally I use trailing stop loss in my trading, but this market is, as I said, it is not as per my requirement. Here you need to keep targets. If you get, say, 10%, 15%, whatever, it can be based on percentage, it can be based on 8 years. Okay, some volatility, like a Bollinger Band. Okay, so but keep targets in this market because trends are not sustaining in this market, especially long trends are not sustaining in this market. So I'll take targets in such markets.
Right, makes sense. Also, the way we structure the competition, we've made targets and stop losses compulsory, so that one at least commits to that and offers a technical analysis-based rationale for why they have chosen these targets.
Yeah,
And it's
yeah,
also very important to know you kind of have a plan for the trade before entering, and that's kind of, I think, one of the most the oldest adages that we've learned as traders is to plan your trade before you trade your plan. Anyways, now that both Joman and Bhavan have been able to join us and their connection seems to be somewhat stable, let me invite the two of them to just quickly introduce themselves. Joman, let's start with you. Do you want to maybe just introduce yourself quickly, talk about what you are doing, right now in life, if you're studying, and your CMT experience so far, anything a bit about yourself, and then we'll move over to Bhavan. Over to you. Yeah, you're off mute, Joman, but we can't hear you.
Oh, something happened there.
Press
So
my,
I'm audible.
yeah,
yes.
you are. Go ahead.
My name is Jomin. I'm from Kerala, India, basically. Currently, I'm doing my MBA from Saint Kitts Institute of Management.
You're doing an MBA, you said, is it?
MBA.
Say again?
Okay. And I was interested in trading and investment in my college days. I done my UG undergraduation in BSc chemistry. but I got a partiality
Chemistry.
towards stock market at that time. So I learned more about stock market and trading, and I started trading. The thing I usually do is that I trade using supply and demand, which is order blocks, and also based on trends. But nowadays the market is choppy, so I did not have to take trades. I even did not take trades in the competition to a past 10 or 8 days.
Got it. And tell us a bit about how you got introduced to technical analysis. Is this your first time learning and understanding the discipline, or have you used technical analysis in some way in the past?
So, sir, I'm not able to hear.
So my question was, tell us a bit about your, your background with technical analysis. Is this the first time you are coming across technical analysis and using it as a student at St. Gates, or have you used technical analysis in the past when you discovered the markets and started kind of getting engaged with it?
Okay, I have used technical analysis in Nifty in the Indian stock market for trading options and options.
Got
Uh,
it. Great. So, do you have any questions for any of our mentors based on what you've heard? Or in general, do you want to maybe share your experience with the investment challenge so far?
the question I have a question. I have a doubt. Uh, I always trade with supply and demand, uh, taking as support and resistance. Basically, finding order blocks, and I traded but I can trade in long time frame, but I cannot trade in short time frame. Is there is any way to trade in short time frame like 5 minutes or 50 minutes?
Um, from the perspective of the challenge, obviously, we are looking at trades that last beyond at least 2 days, right? So, when you look at the challenge, perhaps the shortest time frame of 5 to 15 to minutes to even a few hours might not be suitable. But in general, I'd love for you to hear from our panel about what they think might be an interesting approach, especially from this supply and demand slash support resistance perspective. Would any of you like to take the question, or should I fix?
Sure. Yeah, there's the way I look at it for technical analysis, there's two kind of just primary, or I say three primary things to look at. So support and resistance is obviously one of them, trend being another, and then momentum, the momentum of that trend, I would say, being the third. So focusing on one of them is great, and using supply and demand to try to find entries and exits and profit targets and stop losses. That all makes perfect sense, but you just need to make sure that you're incorporating that in a longer term picture, right? So for example, if we're in a downtrend and you're trading supply and demand, it would make more sense to look for shorts around demand zones and your covers around supply zones, and vice versa. And if you're in a sideways trend, then maybe you're just playing that trend as well. So support and resistance is great. It's obviously very important. It's something that we all look at and study constantly. It's just important to make sure that you're incorporating those other two aspects as well, right? So what is the trend of the overall market, and then what is the momentum of the trend of that market, right? If the market is moving up, but it's doing so in a very slow way, that may curb your trading as well. So we all talked about how choppy the market's been recently. So some adjustments to make there is maybe just focusing and saying, okay, if the market is choppy, I'm going to look just to simply buy supply and sell demand, and do that over and over again. And when it starts trading, that's when I'm going to switch up to maybe buying pullbacks to prior supply zones and things like that. So understanding the order blocks and everything is fantastic. It just has to be taken in context for an overall trend and momentum picture. That's the way I look at it.
Wonderful. Thanks a bunch, Mike. Would either of you, Sowmi or Sovit, like to add some texture to this?
Yeah, I think I agree with that. I think what Michael said was good. I would say that if you're doing the supply demand approach, you, you would you know you're trading in a band which is a non-trending band, or maybe even a trending band. But given the short time frame of the contest or the competition, it does appear like you got to put on quite a few trades, otherwise you get disqualified from the competition. So I think you need to find quite a few of these trades, to be in the game. So you may want to employ more than one strategy to do that. Otherwise, you'll just be waiting to reach supply, or to reach the demand point, and then the clock might run out on you. So it's good to have multiple strategies at hand, rather than just focus on one single strategy, because of the time frame of this competition.
That makes a
If
lot of
that
sense.
makes sense? Yeah.
Thanks, Sowmi. Now let's come over to Bhavan, who's finally been able to, I think, and hopefully will sustainably stay on the call. So Bhavan, welcome to the call. And the first thing I want to kind of hear from you is a bit about yourself. You can share a bit about your background, what you are doing right now, and then talk a bit about your experience with the competition in particular and technical analysis in general. Go ahead, over to you.
Yeah, you know that I am Bhavan. So I'm currently pursuing my PGDM graduation in Jagdishwar School of Management, Bangalore, India. So currently I joined this CMT competition to enhance my trading skills and to see uh, how we can use the various strategies to in this trading. So the CFD challenge is a very good challenge, and my faculties and my peers will always help in these strategies, and they also consistently helping me to get a good position in this challenge. So that's it about
Got it. So your faculty members and your peers are kind of helping you to figure out the markets and strategy. Do you have any background with trading yourself? Have you traded in the past or used technical analysis at all in the past?
actually I in past I used to trade more on Indian stock market. So and I'm very much familiar with
I think we're losing Bhavan's connectivity again. So yeah, I guess while Bhavan's connectivity kind of returns to us, actually it's quite fascinating for me, and I'd love to hear from the three of you as well. So Somit, Mike, Swami, at what age did you actually start out? Because the younger folks I see, the younger every successive generation of traders gets, the more fascinating it gets to be that the access that of markets and tools that are available right now wasn't there in our time.
Right. Yeah, he's back.
You see something?
Hello, am I audible? I'm really sorry, sir. I don't know what is
No
happening
worries,
around
Bhavan.
me. It's a network
Yeah, no worries,
connection.
Bhavan. Everyone's
Uh,
very familiar. And there's a very interesting comment right here, and I don't know if this is a fundamental factor affecting Bhavan's connectivity, but yeah, it's a funny world we're in. So, Swami, you were saying about when did you enter the markets and really, get familiar
Okay.
with this for the first time?
Sure. Yeah. You're quite right, Joel, because I started technical analysis in right around 1992, 93, in the mid 90s. And at that time, I was an oil trader for my employer, which was Mobil Oil Corporation. and we had an Asia Pacific office, and I was trading oil, basically for physicals, and then it was quite by accident. The people who supplied the teller, we used to use a machine called Telerate to read the screens, and the guy who was a contractor supplying those machines used to, I think. He was also selling technical analysis products, because back then technical analysis was in its early days in terms of technology. I mean, technical analysis has been around since Dow Jones in 1899. But the machinization of technical analysis was initially by some companies like Future Source and things like, and a few other companies. And he was selling those machines, and he tried to get me interested in technical analysis and wanted us to lease some of his machines. So I said, fine, why not? I will take a look. And then he installed a machine, and then it gave me some books to read. And so I was fortunate in the respect, because I learned it through my employer. And learning, through the employer is always easy, because it's part of the job, as opposed to trying to do it part-time or when you're doing your MBA or other things. So I had a head start, and I attended quite a few courses, and got involved with that. And the more I read, the more I was interested, and so that one thing led to another. And so we were able to employ some of these techniques in our day-to-day trading activities. So that's how I got interested in it, and it is sort of unusual in that respect. But I kept it going, because I did move on to other jobs in marketing and management, but kept my interest alive. And then after I finished up my employment with ExxonMobil, I started to focus full time on technical analysis. And then I decided that I would go, register with the CMT, and I spoke to, I think one of the organizers at that time, I think Joel, your counterpart in the US at that time, and said, I went to a seminar, the symposium in 2014, and I said, would this be a good idea to do? And he said, yeah, sure, why not give it a go? And so I took the exams, and I passed the CMT, and then after that I got my accreditation, and then I decided I would start a consulting business, doing consulting in the area of energy and other commodities, because energy being my primary background. But when you look at technical analysis, it applies across all asset classes. Commodities, stocks, bonds, private equity, and so on and so forth. So that's how I became more involved, and I think through the CMT, I've actually learned a lot more, and spend a lot more with meeting people with similar interests, and so that's basically how I got involved.
Thanks.
Quite by accident, if you want to know the truth.
That's some of the best moves in careers happen by accident, I feel.
Yeah.
Let's come back to Bhavan now that he's been able to join us. Bhavan, do you have a question based on the past couple of weeks and what you've observed and learned in the competition? Do you have a question for our mentors?
So my question is, if we see currently, there is so much volatility in the US stock market. So what is the proper strategy to what is the proper strategy that we can use in this
So when you
volatile
say
environment?
proper strategy, are you talking about something very specific, like a specific indicator or a specific plan of action, or are you talking about in general, how would one approach a market when it's as volatile as it has been in the past 2 weeks?
Yeah, past 2 weeks we see many of the IT companies that are falling. There are so many layoffs in jobs also.
Right.
So there is a recession kind of thing, as well as US Fed market is also increasing its Fed rates. So how can we see the future situation in this kind of market?
Makes a good question.
It's
So,
very
do you
good.
want to start with your thoughts on this? Maybe talk about how do you view volatility, and given that there is even in the US the talk of recession is being thrown on quite freely, the Fed is starting to get more active. How does one view and cope with the volatility in the markets right
Okay. So basically,
Uh,
volatility we can't change, right? But we have to adjust our strategy based on volatility. So as I said before, in this type of market, retracement strategies may work better. Okay, the reason why is that firstly you're with the trend. Okay, so you find the trend by any means. You can use moving averages, you can use linear regression, you can use trend lines, you can use RSI, whatever you identify. I'm not going to specify the tools, uh, right? So you identify the trend and wait for a pullback. Okay, and say just for example that there's a pullback, and say the price comes to near a 20-day low, 20-day lowest low, right? So that may act as a support, right? It can be anything, it can be 20-day low, it can be 40-day low, whatever. Okay, try to buy near to that low, because that low is your stop loss, right? Keep your stop loss, and when the price comes near to the low, that say 5% away from the low, 3% away from the low, and then starts to move upwards. Okay, one or two good green candles. Okay, if it is making somewhere near to the low, there is some chance that will start to move up again, right? And your stop loss is very very small because the low is your stop loss. So your stop loss is 3%, in the range of 5% to 3%. We're trying to capture in a pullback. If it works, okay, your target is say 20-day high, say 20-day high, whatever the previous high was. Okay, that is your target, and your stop loss is small, say 5%, whichever is the low. So this way your stop loss is small. So even if there's volatility, you lose less if if you are losing. Okay, and if you are lucky, say of course here you'll need some luck. Okay, because markets are choppy, correct? So if it works in your favor, your target is met and you exit at the target, and don't wait exactly for the previous high or the 20-day high. You can exit little early than that. Say if it 80 to 90% of that move has happened, you can exit at that point, or you can keep like a from the previous high, you can say a 2% range, where if it reaches, I'll exit. Something that like that you can do. Okay, so I think that type of strategy would be little safer in this market scenario. Okay, you won't make big money here. You're not capturing the major uptrend. Okay, but any which is your time horizon only 2 months, right? So you have to perform in these 2 months. So here you'll get some movement in some stocks, okay, and which should keep you up in the context.
keep you busy as well because the competition requires that you are active. I mean, that's it's very interesting the way we structured the rules. We want for people to get involved in the competition and force themselves to really look hard for trade opportunities, and at the same time, we're hoping also, given the markets like this, we that folks find that balance and don't overcommit as well. So that's a very interesting situation for us to be in. Mike, any comments about Bhavan's question? How you deal? How would you deal with markets that are as volatile as they are right now?
Yeah, the way to deal with chop, again, 100% agree. Um, there's two ways, and the issue is that only one way works for the challenge, right? So the two ways that you deal with kind of choppy markets is one, you just avoid them, right? You just either sit in cash or you take longer term positions and just wait for the chop to move out. And in maybe the real world, this would be a better way to go about it if it was really your money, as opposed to trying to get involved when the market's kind of choppy and things are no fun. But you guys are in a challenge, and there's a deadline and you need to participate. So the other way that you can deal with chop is to again zoom in, right, and look at lower time frames without getting into things that we're not interested in the challenge, like day trading and things like that. But um those are the main ways to look at it. And again, the other, I really think a focus on relative strength and relative weakness will serve both of those, whether it's a challenge or whether it's real money, because uh you know there is a market out there. There is something that's moving at some time. The issue then becomes finding it. And some of the easiest scans that you can run is look for things that are close to 52-week highs or 52-week lows when you're looking in terms of relative strength, or look for things with upward or downward sloping moving averages as a way to define trend. But you need to understand, you're in a buy the dip and sell the rip market. So, whereas in bull markets, maybe you're going to try to go for 3 or 5 or 10 times your initial risk on a trade. You need to look at the environment you're in and say, maybe going for, 1.5 or 2 times my risk is all I'll be able to get away with until that kind of chop drags things down. So, if it was me in the challenge, I would focus on relative strength, things that are moving at the time, and then understand that we're getting this choppy action. So you've got to zoom in a little bit and be a little bit more conservative about the amount of money you want to make in any given trade.
So one of the questions that has come in is, would you look at even scalping action, not from the perspective of the competition, because obviously we are discouraging ultra short term behavior from the competition's perspective. We see the competition as you working for a mutual fund house rather than a hedge fund, and we're taking kind of that approach to it. But there's another interesting question coming in from the participants who are watching this right now, and Kareem in particular. So let me just read this question out. I thought I'll put this up as a comment, but I think there's a character limit to how long a comment can be. So the question is, what would you advise on risk allocation? Would you advise less trades with more risk, or more trades with less risk? I know that it's ultimately strategy based, but just from a simple perspective, it would be good to hear your advice, because quantifying an approach does not seem to be working for most of the stocks in a market that is downtrending. Sowmi, do you want to maybe share your thoughts on this, and then we can go on the
Yeah, sure. I just wanted to go back to the previous question, and I think Michael and Sovit covered the idea as well. But one other idea for a real short-term trading challenge like this is and trying to apply some technical analysis if possible, is we're going through an earnings period, and make a list of all the earnings that are going to be announced every week, and there are quite a few stocks that are beating the earnings, and so you got to make a call. You got to go back and look into history. What is the history of the company beating the earnings over the last couple of quarters, and so on and so forth. And this is also part of the CMT curriculum, if I remember right. In CMT3, we talk about earnings and the impact of earnings and prices and things like that. So that might be one way out for those who are participating in such a short-term challenge, because you've got so many companies, the 500 companies reporting earnings. So you got to be able to find a couple of those that where you can make some quick profits if you're good, and I've been watching a couple. You can get up to 3 to 4% or even more, depending on how the earnings beats are. That's one way to maybe get around this dilemma of how do I trade this market, which is choppy and downtrending.
Makes sense.
Yeah.
And so, what about so this kind of we have been in the same theme. The other question:
Yeah,
trades with more risk or more trades with less risk?
well, I would say more trades with less risk, because you're really in a survival mode. If you put fewer trades with more risk, you could be wiped out fairly quickly in this choppy market. So you want to preserve capital. That's got to be the name of this game. So to preserve capital, you spread your risk. So for instance, if you're trading earnings as an example of the S&P 500, spread it across 10 companies that at least 5 of them should be okay for you, because on the given a 50-50 probabilities of these being right. So you got to give yourself the best chance, and the best chance is when you spread your risk in these choppy markets.
That makes no sense. Let's come back to our winners for the week. Joman, Bhavan, do you have any questions that you want to kind of follow up with for our mentors? Okay, if you don't have, don't worry. There's always I always have plenty of questions to talk about.
Joel,
Yeah, go
Joel,
ahead.
I'll like to answer the Karim's question. Okay, he said low risk and more trades, or more risk and less trades, right? More less
Yeah.
like higher risk and less trades. Why not low risk and low trades? Why not that?
Why not?
Yeah, why
Okay,
not trade
you have to
less?
understand that you have to keep the low risk at all the time, as Swami said. Okay, the the game by itself requires to preserve capital. Okay, you have to survive in this market, whether it is choppy or it's not choppy. Then also you have to survive in this market. You have to think that I have to play this market for 50 years till I'm alive. That is what my mindset is. That I have to play this market for 50 years. Okay, and you cannot play this market with high risk at all. Okay. Secondly, that having more number of trades is more risky in a sense that firstly you'll be paying more brokerages, more HTT, more transaction costs to the government and to the market participants, more slippage also. And another thing is that more trades means you are more exposed to the markets. If you remember in level 3 curriculum, Perry Kaufman has repeatedly said 3-4 times in the first few chapters that high number of trades or leads to higher exposure, and higher exposure leads to more probability of price shocks, right? So if you are more exposed in the market, your probability of hitting a price shock in against you is much more probable than if you have lower exposure in the market, right? So, and especially in this volatile market, keep your exposure low. Okay, I love those systems which have an exposure of less than 50%, but they could give good returns. Okay, that means you are not in the market for 50% of the time. So you are earning that risk-free rate of say 2% or 5%, whatever is you are getting in the country. Okay, plus you are getting your uh, your equity returns for the balance 50% of the time. So it's like a guerrilla warfare where you get a chance, you enter, otherwise you are out of the market. Okay, so in markets, I think guerrilla warfare works the best.
That's true. It makes a lot of sense, like you said, so to not trade also at times. Who's it that said the time to go long, a time to go short, and time to go fish? Probably a time to go fish. Another
It's
very
a good
interesting
one.
question came in on Discord. Again, this again is from Kareem. How do you determine that a trade is not working if the stock is neither hitting your stop nor going and taking your profit? Right? Would you use time stops or would you just rely on price action and kind of act from there? Mike, do you want to take this?
Yeah, I think you have to have a time stop in your trading strategy. I think you have to, and even if it's generally, I like to look at a time stop if down or flat, right? So if your position is losing you money, even if it's not hitting your stop or if it's not going anywhere, I think you have to have a time stop, and the reason for it is not just in the challenge, but everywhere. It's Brian Shannon actually has an old saying: "If they don't scare you out, they'll wear you out." And sometimes it just means that the market will just chop sideways till you get too mad and you have to leave. But you got to think of even though you're not losing money in the trade, you have to think of the opportunity cost, right? What could you be doing with that money, especially in a world today where you can just dump your money somewhere and get 5-6% return,
Yeah,
right? It
right.
becomes even more
Right.
important. So you have to have this is the period of time I'm going to let it work. Peter Bryant, who actually was in the New Market Wizards, which is a great book, talked a lot about just he had a Friday rule, and his Friday rule was anything that was down or flat on a Friday he would kill. And the guy's been trading for decades and decades and decades and does very well with it. And it's a very simple rule, and I think it's a pretty good one because you can always get back in on Monday if and when it turns and starts to go in it. But I think having some sort of I'm not just going to sit here and let this take up my buying power rule. I think you have to.
That makes a lot of sense, and it's so much more about money management and, like you said, opportunity cost than it is about just. Any comments, Swami?
No, I think it's a very good point. I think both Sovit and Michael, made good points. I think it's it's time in the market that's important, and particularly, for instance, a weekend in the commodities business, particularly if you're trading futures, you've got to think twice before leaving a position on a Friday for the weekend because anything could happen. If you've got a reasonable profit, take it. But if you want to stay in the market for the longer term, maybe in equities it's a bit different. You can, because if you're long Apple's not going to go away. It's one of the biggest stocks in the market, so maybe you can take the risk. But I think, as Sovit said, I think he quoted Perry Kaufman, and I think that is a good point because Perry is big on this thing about getting in, making the profit and getting out and staying in cash or other assets where you have preservation of capital. So I think the name of the game is that preservation of capital, so you can come back and play another day.
Makes sense. Thanks
Joel,
a bit.
I'd like to add on this.
So please go ahead, of course.
Yeah. So basically, on time stop, you have to find your strategy firstly. Okay. You cannot use a time stop on a strategy in which you are expecting to have big returns. Like if you remember in the book by this uh, I forgot the name. The operator, this the reminiscence of the stock operator, right? Yeah, in which he said that it was not my trades which made money, but my sitting tight with the positions which made money, right? So if you are looking for like 100%, 200%, 500% return, you have to sit. Okay, you cannot keep a time stop if you want a bigger returns. But if you want to optimize your returns, right, in short term, okay, then you have to rotate your capital. Okay, you cannot let the stock which is sideways or not doing much, okay, eat that time, right? And also one more thing is that if you have a breakout type of a system, okay, short term breakout type of system, then you need to keep a time stop because if a breakout has happened and the stock is not working, okay, after the breakout also, if it is sideways, then most likely it is a false breakout.
Right.
Then you exit. Okay, so it will depend upon your style of trading. Okay, it has to be based on your style of trading and the tools which are using to and your expectations of what from the market. All that will depend upon how you have to use the time stop, or you whether you have to use the time stop or not to use the time stop.
This is superb insights, Sovit. Thanks a bunch. And we've already hit our 1 hour mark, so I think now would be a good time for me to bring this home and thank you guys. But I'd love with maybe all of you to share one comment about any piece of advice, because apart from the folks who are watching this live, this video will live on in the Knowledge Center on our Discord and on our Discord channel. And I can see Kareem has come up here and said thanks as well. So thank you on behalf of Kareem and all the other folks who are watching it live and folks who will be watching the recording as it lives on, like I said, on our Discord Knowledge Center within the 2023 Summit section. So it's been a lot of fun for me. I really enjoy these interactions every week, and I'm hoping that every week we see new participants who are able to kind of learn, share their thoughts. So let's start with our participants, Bhavan and Jomin. Do you have any comments or thoughts to share right now as a final parting thought? And then we'll go around with the mentors and we'll call it a day. Jomin, do you want to start?
It's a wonderful opportunity to have this session, sir. and I would like to be a part of this CMT. But sir, thank you, sir.
Wonderful. Thanks a bunch, Bhavan, and we look forward to having you, be actively engaged in the community as well. Jomin, anything you'd like to share? Your audio is not, no, not yet, Jomin.
Hello, sir. Am I audible?
Yeah, I can hear you now. Go ahead.
Yes, sir. Thank you for giving me this opportunity for being in the mentorship class.
Great, great.
And
Thanks a bunch, Jomin. I'm glad that you are enjoying your journey so far. Um, and yeah, I'd like to see you guys maybe win future weeks as well, so we can have another more engaged session with our mentors. And I really want to once again, to the three of you, Sovit, Sowmi, Mike, thank you so much for your generosity.
You're welcome.
um, you've been mentors in previous editions of the challenge. You are now, and I think, and this I hear of informally elsewhere as well, that the fact that you folks take your time out to spend with our participants, candidates, students from the academic partner program, just helps establish the credibility of the discipline itself, and in general of the community, the CMT community, as one that is so keen on just sharing and giving their perspective to future generations, because there is just so much for all of us to learn. So one couple last comments, and let's go backwards now. And Sovit, do you want to start?
So thanks a lot, Joel, for giving us the opportunity to talk here and listen to the candidates and learn from the candidates also, because of course we also are in a constant journey to learn, and any person can teach us, right? And for the participants, I would say that it's a great opportunity for them, that they can do. This is like a paper trading, right? So to test your strategy, to test your mindset. Okay, this is a very good playground. Okay, and don't worry about winning and losing. Okay, I would say that if you keep that in the mind, then it will become difficult for you. Okay, just play the game for the love of it. Okay, and again, this 60-day will not judge you. You cannot judge yourself, or nobody can judge you on the 60 days challenge. Okay, you have to play your own style and try to adjust with the 60 days challenge, because see, your style can be very, very different. Okay, but in the markets there won't be the same market. It will not happen that the market is always trending upwards or always trending downwards or always sideways, right? So you have to also develop those strategies, develop those mindset, because the different mindset is required for different type of markets also. Okay, and work on yourself. Okay, that's the most thing I would say, the most important thing, that strategies don't run after the strategies. There are millions of strategies, and you can make money all the way, whether do day trading, jobbing, long term investment, short term swing trading. Money can be made with all these methods. Okay, don't let anybody tell you that this by this way the money cannot be made, or by this way the money can be made. Okay, there are lots of ways of making money. Okay, you have to choose your style which suits you the best, and then develop more styles. Okay, it's like, if you want to keep your equity curve smoother, develop more strategies, go to multiple markets. Okay, and diversify in markets, in strategies, and in time frames also. That will be the best thing which you can do. Thank you.
Thanks a bunch for the golden words, Mike.
Yeah, the only thing I would add to that is risk management is everything, right? I liked the advice not to focus on winning and losing, because you can't control that, right? All you can control is the strategy that you create, and following it well. And but you want to treat this as not like it's something that you're trying to win, but strategies that you're trying to create and hone that eventually, hopefully, you can take and use with real money. So um, in that case, it's the focus on risk management has to be everything. If you're swinging from the fences, and you're trying to win the challenge and you're having fun, that's fine, but you need to make sure that you're having that risk management focus, because if you take the same thing, and maybe you're very, very risky, and you use that risk to win the challenge, and you get lucky there, eventually, when you go into the real world and you start trading that strategy, that's going to not work for you. There'll be a time where, if you're trading too risky and you're not sizing correctly and things like that, that'll come back and bite you. So when you're paper trading, just pretend this is a real money, pretend you're actually working in a job somewhere, a mutual fund that Joel mentioned, something like that, and treat it as if it's your money and your client's money. Just to instill, even though it's fake, to instill that kind of risk management, structure in your head as much as you can, because that is what's going to save you in the long run in this industry. Everyone that I know who's been doing this for a length of time, myself included, just has a focus on risk management, because we know we'll be wrong a lot. So it's how do we deal with it when we're wrong, and how do we deal with it when we're right? That's really kind of what separates the winners from the losers in this game.
Thanks a bunch, Mike. And finally, Sowmi, your thoughts?
Yeah, thanks. I think well covered by Sovit and Michael. I think this challenge is unique because the association gives you the opportunity to practice your skills in a sort of a paper trading way, which is the losses are artificial. I think when you go into the real world, you'll find that this prepares you well. And I think you might have heard statistics such as like how difficult it is to make money in the real world. 90% of the people in this business have a tough time making money, and the 10% who make money, make money on 10% of the trades, and it's the trades that you put on where you expect 90% of your trades not to work out, but the 10% you make really good money, so that it covers the losses that you make on the other trades. So winning and losing is part of this game. You're not going to win all the time. So this is a good training ground, and I think it's a great opportunity that the association is providing for you guys to fine tune your skills and get better at what you're doing. So I wish you all the best, and hopefully you'll put on some really good trades going forward.
Wonderful. Thanks a bunch, Sowmi, and thank you to all of you for joining this call, all five of you. It's a pleasure for me to kind of see this effort validating itself, and for us to to kind of build this culture of learning and enjoying this discipline together as a community. So thank you, all of you. I really appreciate this.
Sure, you're welcome. Thank you.
Bye. Bye.